Here though.
There we go. So, welcome to Crypto Mondays. It's Wednesday, the 30th of April, and we're super excited to have Joseph Chu here as our guest today. Joseph is head of credit at Meanwhile, and he oversees all the investments and particularly the Bitcoin denominated capital for their regulated life insurance. They've just done a raise, which he's super excited about, and I'm sure he's going to tell us a bit more about that in a minute. And Meanwhile is notable as the world's first and only Bitcoin native whole life insurance company based in Bermuda, regulated by the Bermuda Monetary Authority, and offering policies with premiums and death benefits paid in Bitcoin. So over to you. Thanks so much for being here, Joseph. Please go ahead.
Yeah, thanks for the opportunity to talk with you folks. Let me just adjust a little bit. Um, and um, I was just telling everyone that we're doing an event tonight in New York City at the Pub Key Bar. So if you know anyone that's in New York that would be interested, please let them know. I'll send a an invite, even though it's probably oversubscribed. Um, yeah, I mean, I really enjoy talking about this. Um, it is something very different, and we've got a great team, and we've got some validation recently in our raise. And let me get into it. I mean, it's not something that most people have heard of, right? Like life insurance, Bitcoin. Um, it's life insurance is a pretty boring business. Um, Usually people roll their eyes unless they just got married and are about to have a kid, and then they get really excited about it, right? Um, so who am I? Joe Chu, head of credit. In practice, that means I manage the investments, and I'll get into that a bit later. But that's a really deep rabbit hole to go down. Um, I've been in crypto for 5 years. I was at BlockFi for four, from fairly early, and I was there for the rise, and I was there for the fall, and I learned there were a lot of lessons learned. Um, Before that, I was in traditional finance in a variety of different roles, all on the debt/credit side, starting at Barclays and investment banking. And then I spent a significant amount of time at what I'd call a credit wrapper, or what the industry knows as financial guarantors, which is basically making a loan without funding the loan. Um, I was at a rating agency, Fitch, which was a very valuable experience. Not super fun to work at a rating agency, but super great from an analytical training point of view. I have a CFA charter, an MBA from Columbia, and BA there from there too. Okay, so backing out to the big picture, um, life insurance generally, everyone knows about it, or at least a little bit about it. It is one of the most staid, darkest corners from a technological point of view, um, in terms of industries. Um, it's done basically the same way it's been done for hundreds of years. That's starting to change, um, but there is a huge opportunity there. The so-called insure tech movement. And there is a massive amount of impact that can be had, as you can imagine, for an industry that's largely, just people and computers. Um, there aren't very many competitors in this insure tech world, so that makes it even like a better sort of venture capital case. Um, then you bring Bitcoin into the equation, in the last like decade or so, which I call the most durable expression of technology into currency. Uh, we have Our founders have sort of married the two together. I call it the love child of insurtech and crypto. They were looking for a new venture after they successfully exited a bank fintech company, which they sold to SVB. And boom, they came up with a concept of, meanwhile, life insurance, using only Bitcoin, and we can get into that a little bit more, um, fully regulated. As of a year ago, or out of the the preliminary stages. So we're just another Bermudian regulated life insurance company, of which there are many. Sort of backing up a little bit into life insurance itself. Some of you might know a lot about it. Some of you might know a little bit about it, but breaking it down for you, there's sort of two basic types of life insurance: whole life and term life. Most people think about the term life, which is your employer probably gives it to you for free. Coverage of like a couple $100,000 if something happens to you. And it's like basically 1 year. It's like annually renewing. If it doesn't get renewed, you leave that employer, it goes away. There's no investment component. It's just there for you while you have it. There's no real tax advantages to having it. It's really just the core product. Like if you get hit by a bus and you have beneficiaries, then they are taken care of to the extent of the size of the policy, right? And in general, there are a lot of societal benefits to life insurance and other types of insurances. Whole life is something quite different, where it's really an investment policy. It will last your whole life, assuming you pay the premiums. It grows according to whatever the crediting rate that your insurer is going to provide. And it has a massive amount of tax benefits, especially for Bitcoin, because in addition to the tax sheltered earnings, Bitcoin's value can go up dramatically, and we all in this room think it probably will. That doesn't get taxed in the life insurance policy. So whether Bitcoin's worth whatever it is today, 90,000, 95 today, or 1 million, it doesn't have any effect on capital gains tax. So those who have a decent amount of Bitcoin, want to give it to their kids, this is a very compelling product for them. And there are other benefits too, but hey, so let's face it, it's sort of it's a tax-free investment vehicle for inheritance planning for, relatively speaking, wealthy people. So the life insurance policy, what is it specifically? We have only one product. It's called it's the 10-pay limited pay policy, where you pay once a year for 10 years, and then you stop paying, and you're done for life. That's what the limited means. You only have 10. And that, for example, it could be like 1 Bitcoin a year for 10 years, or 0.1 Bitcoin a year for 10 years. What happens when you pay your first premium? Well, you get your benefit. So if you get hit by a bus the next day, your beneficiaries get everything that the policy states you'll get. So if you're a young guy, which is our typical customer, and they have a 1 Bitcoin policy per year for 10 years, they'll probably get like 19, 20 Bitcoin, the kids. So it's relatively limited in terms of the countries that we do business in, only because we've got to get our AML KYC program going in all the other countries. But we're not limited by regulation to any country in particular, other than the non-gray list and non-blacklisted countries. Okay, so A little bit on like the benefits, features and benefits. This whole protection, future-proofing your family, get a guaranteed death benefit, um, or this concept of surrender value, which you could take advantage of, um, which is basically the cash value that builds up over time. That's the investment component. Um, you get all of this growth compounded tax-free, and you get the capital appreciation of Bitcoin tax-free, as I mentioned earlier. And then there's this other feature, which is the premium loan, where as this cash value grows, after about 2 years, it gets into the positive territory. Then you can take a loan out of it for up to 90% of that value, and you never have to pay it back. It can get deducted out of your death benefit if you want to keep it outstanding for the rest of your life. Bitcoin goes to 1 million. Take a loan for one of those Bitcoin if you have that surrender value, and then you can sell it. Get $1 million of cash, never pay tax on it. You do have to pay us, a little bit of the interest on the loan, but it's financial flexibility product also. Gives you some liquidity in your Bitcoin without sacrificing, without having to sell it. This goes into a little more detail about it, but I'm not going to do too much of this. I'm not here to sell the product. I'm here to just describe it so everybody understands what it is. So meanwhile itself, how are we organized? Right now we have two companies, a holding company and an operating company. We raised cash out of the holding company, which is a US-based, US dollar denominated financials company. We just raised 40 million from Fulgur and Framework and Wences Caceres. Pretty strong names in the space. So we are well funded for the foreseeable future. I think we're now at the point where we're like turning away money because we have what we need to do capital investments, like expand into the US a little bit, to start a stablecoin company, and pay for our expenses. The first seed rounds were led by Google and Sam Altman, so great names to name drop. Just, people perk up a little bit when they hear those names. And the co-founders started fintechs before, based in San Francisco, and we've got other people sprinkled around the U.S. and in Bermuda. That Bermuda OpCo is a BTC only company, meaning that the income statement, balance sheet, and to the extent we do a cash flow statement, are all in BTC. So financial statements, 100% in BTC. We just got audited by a major UK accounting firm. So it's my understanding that we are the only company in the world that has Bitcoin financials that has been audited. So, we're very serious about being a serious company and a stable company that's going to be around for decades and decades. And the BMA, as it's called, does have a strong hand regulating our investments. So what I do, basically, I have to answer to the regulator, what I do with our investments. And we've got an executive team in Bermuda. So for me, the investment part's the most interesting because we don't really have a Bitcoin ecosystem of investments. I would like to change that. So with these insurance policies, which are liabilities on our balance sheet, we need assets to match them, or to try to match them, in terms of returns, in terms of asset liability matching, in terms of safety, so credit. So in the Bitcoin world, we call it yield. Traditional finance, we call them loans. It's a lot harder than you might think, because where do you actually make a Bitcoin loan? who wants a Bitcoin loan, and would you consider that person who wants a Bitcoin loan a high quality counterparty, borrower credit? Um, Especially because we don't want to take foreign exchange risk because our liabilities in Bitcoin. We want to have our assets in Bitcoin. I don't want to, sell Bitcoin, buy equities in the U.S. or treasuries or something like that. Treasuries seem attractive. They make our hurdle rate 5%, or more than our hurdle rate at 5%. But if Bitcoin doubles in that time period when I'm holding those treasuries, I'm in a really bad place because I get basically like half of that Bitcoin back when that investment matures. So got to stay in Bitcoin, and at the same time, we have to be quite safe in Bitcoin. Um, there are a lot of things that are not that safe. You can do with your Bitcoin. Um, uh, and one note on ALM, asset liability management. And we've got 40-year liabilities. We are not even close to finding 40-year assets, but it's something that we are, moving towards, and we'll see how quickly we can do that. So, how do we do it right now? Well, the thing I did at BlockFi mostly was to build a lending book to Bitcoin miners, and they are the natural industry to take a Bitcoin loan because they're among the very, very few sectors that has Bitcoin revenues. So Corporate Finance 101 says, hey, you should have your debt in the same currency as your revenues. So, if you're a European company, you probably shouldn't issue US dollar debt. Miners are the natural borrower, although they're not necessarily the best from a risk point of view. They're quite risky. Um, but we have a Bitcoin miner loan, which we like. We might have more of them, but it's a space that you have to be very careful from a credit point of view. There's something called Parity Repo, which is our proprietary product that we came up with to satisfy our little conundrum of how do we get something that's really safe and that earns enough yield. So I have a whole separate presentation on this if anyone's interested. But basically, it's a tax-based product where we lend you a Bitcoin and we take a Bitcoin in collateral from you. And you pay some modest amount of interest. Why would you do that? Well, if you had a low basis Bitcoin, let's say you bought $1,000 and you've been holding it, and now there are opportunities to get yield off your Bitcoin. There are now Bitcoin hedge funds. There are lots of ways to deploy your Bitcoin if you're not just locking them away. You can't do that without generating a tax recognition event in the U.S. So this product is designed to deal with that, where you give us low basis Bitcoin, we hold it. We give you high basis Bitcoin, and you can do whatever you want with it. You can invest it, you can sell it, you can trade it in a separately managed account by a Bitcoin crypto asset manager, whatever you feel like. Then you give it back to us, and we give back your low basis Bitcoin, and then you're in the same position as you were at the beginning, but hopefully you've got investment returns from all the stuff that you did with it. So that works for that works for us. But we want to develop this market more broadly and have some diversification across these sectors. And my personal interest is in corporate Bitcoin denominated privately placed loans. It's a very big market, private credit, you may know it as. I did some of this type of stuff in the UK and in the US at Barclays. It's just a private loan market. Typically, it's a smaller market, so that's something we could access. I'm hoping that we can do that with reasonably high-rated counterparties. which in the world of Bitcoin, would be double B. That would be great. Um, but I'm imagining that maybe Morgan Stanley will want to get into the space, and Morgan Stanley would take its, excuse me, its single A rating, borrow Bitcoin, and um, all my credit issues have gone away. I've got a high quality counterparty. Um, so that's I guess, the promise of developing Bitcoin debt capital markets that I'm super excited about. Um, and we've got the fourth way that we're earning yield now is to do prime, what they call prime loans, which is um, what prime brokers do with hedge funds typically, where they're taking collateral and they're lending against it. So it's the primary mechanism for a hedge fund to short a stock. Let's say um, they borrow it and then they sell it and forward. It's a very safe type of a loan. It survived the Bitcoin or the crypto crisis of 22 very robustly because of its over collateralization. So those are the main ways that we currently generate yield. And we're constantly iterating on this, trying to innovate also to find products that work in the marketplace using the different kinds of tokenization and crypto technologies. So that's the shorter version there. I'm not sure how much time I used. I tried to keep it within
No, that was
20
perfect.
minutes.
Perfect. Very well done. I've got lots of questions, but Max, is that you with your hand up? Or are you just saying well done? Um, okay, so yeah, that's absolutely fascinating. Because I was going to ask you, how do you pay your bills? Because people are giving you Bitcoin and you're giving the same Bitcoin back to them. So you've got to make that Bitcoin work for you in order to fund your involvement. Is that
In
correct?
the parity repo,
Sorry?
in that parity repo loan here.
So so that's where you earn the money to be able to sustain yourselves or to make a profit as a company.
Oh, okay. Well, so if you're talking about like the premium, so on the life insurance policy, our policy buyer is paying us premiums, let's just say one a year for 10 years. Okay. We get to invest that, or we must invest that and earn a yield. We give 3% is our target because we promise the policyholders 2% growth in their premiums that they've given us in the policy. And that's other spread, that extra percent goes to pay expenses.
So you actually promise, in addition to giving them their Bitcoin back, you promise them a yield on that Bitcoin.
Absolutely.
Wow. Okay.
100%, because that is actually statutorily required.
Okay.
If we don't do that, we cannot call it life insurance in the United States.
Okay.
Whole life insurance, at
Right.
least.
Got it.
And that's the investment component. So your Bitcoin actually grows in Bitcoin terms. And
Yeah.
hopefully it grows in dollar terms also, tax free.
And with a bit of luck, risk-free if you do your job properly.
Right. So that's my challenge, right? To grow it in a safe way and,
Yeah.
take those little piles of Bitcoin and never make them smaller, only make them a little bigger.
Got it. And your main target market, what is your main target market for the product? And have you had a bit of traction, and where's the traction been?
Yeah, we have over 50 policies now in a year of working a little over a year of working at this. Um, so I'm not intimately involved on the sales side, but I do know that generally speaking, our typical customer is a male in their early 30s, right? As you can probably imagine, who has some Bitcoin and just starting to think about what to do with the Bitcoin, probably starting to have kids, thinking more seriously about life. So that has been our main category of customers,
Customers. Hmm. I
but
was
it doesn't have to
wondering,
be, and we're trying to, broaden as much as possible.
I was wondering if institutions would refer people to you for it, so
Yeah, we have a whole train of thought around referrals where an individual can refer somebody. So that's a kind of sales type arrangement where institutions are mobilized um, and they get compensated in a similar way. So there's a lot of thinking around that, but we do have some limitations, especially in the US, because since we don't have a US regulator yet, we are not allowed to technically solicit.
okay.
We can't have an ad in an airport for like Grayscale. Um, we can sell to an American, no problem, but we can't
Well, that's interesting.
do whatever fits the definition of solicitation. We cannot do that.
Interesting. So you like ranked along with tobacco and things like that.
Stuff like that, I guess, except yeah, our
Um,
product.
and and Joe Custody, what is your, I mean, how do you manage that? Because you've obviously got to find some pretty secure ways of looking after the Bitcoin.
Well, we don't custody the Bitcoin because that would imply we didn't do anything with it, right? So we have to actually take it and then invest it in something. And typically that is making a loan, and a safe loan and earning a interest off that loan, because we, as part of our business model, we are required legally to uh, earn a return.
Okay.
So while we do use Anchorage as our custodian, the idea
Yeah.
is that it doesn't just sit there.
Okay. It's just a pass through.
Yeah, it sits there while if we're not doing something with that specific Bitcoin. But the idea is to be deployed with our Bitcoin capital. Um, that's what our
Okay.
regulator wants us to do, and that's what
Right.
we need to do,
And Joe, do
legally.
people have to have it or can they buy it? So, I mean, do people have to actually have it and give it to you, or can they just
Doesn't
pay?
matter. Does not matter. You could have zero and then buy a Bitcoin and do that every year for 10 years, or a tenth of a
Yeah.
Bitcoin or whatever fraction. Um, in our sales process, though, we try not to, um, we try to get people to avoid being exposed to a big run up in Bitcoin, right? If you decided, hey, this is great, I only have a certain amount of cash this year, I'm going to buy a tenth of a Bitcoin, and then next year I'll buy another tenth of a Bitcoin. Well, if Bitcoin at some point really goes on a run, let's say at 3x's, then you need three times the dollars to buy that Bitcoin to keep,
All
fulfilling
right.
the 10 years of the policy.
Hmm.
A lot of our customers already have the Bitcoin and they actually give us all 10 years worth, uh, which we're not technically allowed to do as a single payment policy, but we hold it aside and say, we're going to pull next year's Bitcoin out of this fund, right? Every year for 10 years for you. Um, so you don't have to worry about acquiring it at elevated prices.
Like
So we do a
escrow.
little bit, we're not financial advisors, we're not tax advisors, but we are, mindful of the obligation that they are taking on. They're effectively sort of short Bitcoin in dollar terms.
Yeah. Yeah. And can people terminate the policy at any point, or is it a mandatory once you're in for 10 years, or you're in for a certain?
You can terminate. There is a mechanism for that. There's something called surrender. Um, I think we have only had one policy, surrender of policy. Um, basically, the policy grows into the positive territory after like the second year.
Hmm.
So at first, the cash value of the policy is below, 100%. because we have, costs or whatever. But as that grows, then it goes into the positive territory. You'll be able to surrender for less than 100%, for the first 2 years. And then after that, you surrender for whatever that value has grown to.
Mm.
But I think
And would
that the
you get
one
taxed?
person, pardon?
Would you get taxed for pulling it out early?
Um, I'm not sure
Right.
about that. Um, there have, I think the person that wanted to surrender, we're not even gonna give them less than 100%. We're just gonna give them the premium back. Just
Okay.
it's a small amount, and we don't want to. We just want to do it with the right thing. Um,
Mm.
so tax, I'm not sure about tax implications of surrender,
Got
but
it.
we don't want that to happen. We're trying not to encourage it. But yeah, I mean, you can do it in whatever way that normal whole life insurance deals with surrender.
Yeah.
It's relatively generic, so we didn't try to do anything different. We're
Got it.
very very generic.
And just explain, Joe, the loan. You mentioned you could borrow up to 90% of the value.
Yep,
Is it current value, or how do you work that out?
it's
And
it's
what sort of
big in
interest
Bitcoin
are you paying?
terms, so it doesn't matter what the dollar value is. So
Okay.
let's just say you are in a positive cash value point, which is like after 2 years, so it's grown enough to overcome the expenses at the beginning.
Mm-hmm.
Um, uh, then you can take 90% of that number, which grows in a very stable way, and do whatever you want with that Bitcoin. They're taking
Mm.
it's a Bitcoin loan, so you can
Okay.
sell that Bitcoin for dollars if you want, um, and you never have to pay that back. It comes out of your death benefit, so whatever your kids get, that goes down by the size of the loan,
Mm.
1 for 1, um, and you have to pay interest. So 3% interest, I guess, is what you have to pay. Um,
3%.
yeah, it's equal to my hurdle rate. So
Okay.
we're basically economically indifferent to whether you take a loan and pay us three
And you
percent, or I invest it
and make
and make
3%.
3%. So we
Yeah.
put ourselves in the position of being sort of indifferent.
Very clever. If anybody has any questions, just jump in because I'm just firing away here. Yes, Shot, I can't pronounce your name, but please go
Yeah,
ahead.
you can call me Java, but thank you.
Okay,
Thank you
good.
so much for the presentation.
Thank you.
We're neighbors with you in the WeWork where your office is in San Francisco. So I've
Oh,
heard a lot
really? You're
about you.
650
Oh,
California?
I am, yeah, I'm just the floor above. So we used to be on the same floor before, and then I think you guys recently moved.
We
So
moved to 5 from 6, I think is what we did.
yeah. Yeah, so that's awesome. But yeah, so that's when I saw this email, I was like, I should jump on and listen to what you guys do. Um, and I just had like two questions. First one
Sure.
being, I was curious, what do the Bitcoin miners usually borrow Bitcoin for? Because I assume they already have a surplus, right? But yeah, just was curious
Not
about that.
always. So miners are in a position where they need to constantly buy new machines, more modern machines, more efficient machines, typically, to keep up with hash rate,
Hmm.
right? Because
Yes.
global hash rate is growing. Um, if they don't keep up with their share of total hash rate, then their Bitcoin that they mine keeps going down and down and down.
Hmm.
So they have a CapEx program, which is probably pretty expensive, um, and
Hmm.
they need to often finance it, right?
Hmm.
And they can finance it in whatever way the market will allow them to. Um,
Hmm.
if they borrow dollars, it creates that currency exposure. So
Hmm.
borrowing dollars in a rising Bitcoin dollar environment is good for them. So it's kind of like they're operating as a long only Bitcoin
Yes.
hedge fund if they borrow in dollars. And that works as long as the value of Bitcoin is going up. But if Bitcoin crashes like it did in 22, and it
Hmm.
goes down by 70%, then suddenly your debt goes up by 70%. So it
Hmm.
accelerates, it makes you, there's a lot of leverage and accelerates the downfall, I guess, in a sinking market,
Hmm.
if you borrow dollars. So it's up to
Hmm.
the CFO or whatever, if they want to have that leveraged business model where they do well only when Bitcoin's up and they go
Hmm.
bankrupt, and or if they sort of survive, right, and grow slower by borrowing in Bitcoin because they know they're going to have Bitcoin, some amount of Bitcoin anyway, to repay the debt.
And just in this case, then, if they're borrowing Bitcoin, then do they just put up like a smaller amount of Bitcoin as collateral, or what would you take as collateral in this setup?
So the Bitcoin mining loans tend to be secured by all of their miners at minimum, right? So the thing that they're buying with Bitcoin, and then corporate security, so all assets of the company. So
Got it. Got it.
if they're asset heavy, meaning they own their
Mhm.
sites, then it means the land, it means the electrical connections, the substation, the right to receive electricity in a place.
Mhm.
Basically, everything that they have would be pledged as security for the loan.
Okay, that makes sense. Thank you. And the second question that I had was, I didn't fully understand parity repo. Is that like a wrapped sort of version of Bitcoin, or
No,
how would that work? Yeah.
yeah, I mean, it's a it's a special product that we've invented. That is purely tax based. So I can go through this kind of quickly. Um, it is a repurchase agreement, just like a traditional treasury repurchase agreement is. That's a it's like a $10 trillion business. This is how banks fund themselves. Um, uh, but I refer to it as a loan because it's easier to conceptualize as a loan because repo gets really complicated, buyers and sellers and the buyers and sellers
Mm.
flip at the end. It's very easy to get confused about it. So if you think of it as a loan, um, all I do is um, I give you, let's say it's for 10, I give you 10 Bitcoin. Okay. You give me 10 Bitcoin and you pay interest of 3%. In this case, you pay it in advance. So what's happened? I've given you some Bitcoin, you've given me some Bitcoin. Um, it doesn't immediately seem like a logical thing to do, right? Because why would you want to take a loan
Yeah.
when you have the exact same amount? Um, well, it has to do with the basis of that Bitcoin. Some people have bought Bitcoin really cheap. They've got Bitcoin they bought at $10,000 or 5,000 or 100.
See.
If you have that low basis Bitcoin, if you do anything with it, almost anything with it, you're going to get a big tax bill. If you go buy into a Bitcoin hedge fund, um, or subscribe to some wrapped Bitcoin DeFi protocol, the IRS is going to bang on your door and say, I'm going to calculate the difference between your basis and today's price times zero point 0.2 of capital gains, and you got to pay that the next quarter. Not many people want that cash tax bill. So they don't do all these investments. They're kind of forced to not do anything with their Bitcoin, which many people don't want to do anything anyway. But if you want to do something with it, then um, this type of product helps you with that. So you're basically paying 3% to defer capital gains on your Bitcoin. Not never pay, because once we're done with the loan, you'll get your low basis Bitcoin back, and at some point, if you do something with it, you'll have to sell it. But this helps you.
That
Helps
makes
them.
a lot of sense. Thank you so much.
Yeah,
It's
it's
complete
a pretty
sense.
good
Yeah.
product,
Yeah.
if you want to do something with your Bitcoin.
Yeah, that makes sense. Thank you so much.
Yeah, anytime.
what I've been struggling with, and which has been really interesting in this conversation, is thinking of Bitcoin as I mean, we already know that we're happy with it as a store of value, that in our mindset, it's not quite there as a medium of exchange, but thinking of it as a unit of account, which you kind of are you're calling you having you're not denominating your insurance in dollars or pounds or euros. It's actually your unit of account for your business, which
Absolutely.
still finding quite challenging. I mean, I got in 2017, and it's interesting that I still struggle with that. You still keep converting it into a currency.
Dollars, yes. It's a conceptual kind of crutch that yeah, we all have. Like the
Yeah,
way we think about Bitcoin is in dollar terms.
yeah, yeah. Crazy. We've lost your voice, your sound, Joe.
Sorry, Robin.
That we lost your. You were
Oh,
talking, but we couldn't hear you.
am I back?
Yeah,
Okay.
perfect.
Yeah, sorry. So we have to do a kind of a mental backflip. Just think only in Bitcoin terms.
Yeah,
Most people it's just like the way our brains are sort of wired.
yeah,
We don't think in that way, but we've over time, working in this world, have learned to, you know,
yeah.
walk on our hands, basically.
Right. Any more questions? I've got one last one, and then that's all from me. Anybody got any questions? Charles, anything from you? You lived in this world at some point, this financial technology. Anyway, shout if you have anything. One of my last question is about your raising of capital, and how, how do you view your business? It's a startup. How do you position it for raising of capital? How challenging was that? Were you involved in that journey? What was your experience with that?
Yeah, I wasn't involved at all in that. One of the founders, I found.
We lost your sound again. It's gone.
Oh,
There you go. You're back.
how about now? Okay, sorry. Um, Um, one of our founders, Zach Townsend, is the main force behind the equity raise. He started a fintech company called Standard Treasury and sold it to Silicon Valley Bank. So he's been down this journey before. He ran the fintech practice at McKinsey for a few years. I think after he sold that one, he was the New Jersey's chief technology officer for a while. Um, so he's got all deep relationships in the industry, and the 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 fundraising process was quite informal. I was shocked really by it. He just wrote a memo and he just started having meetings with people, um, and ultimately the interest was very strong. So he could have raised, I guess, probably like 2x what he did raise. But I guess the art of it is to not raise more
Mm.
than you need.
To dilute too much.
Yeah, it's dilutive, and then um, you basically create a situation where you got to grow faster, right, than your planned growth trajectory.
Mm.
So it puts a lot of pressure. So um, companies have put themselves in a bad position by raising too much. Um, uh, so it seems from the outside, we would hear updates. It wasn't that hard,
Mm.
um, but I wasn't in those meetings, so
Okay,
can't
got it.
can't can't there's no testimonial I can make about it. Seemed like it just sort of happened. So, and people have
Well,
been calling now too.
the
They're
first
waiting.
two
Series
weren't
B,
too
they're
bad.
asking, and we're
Yeah.
like, we don't need it.
When you start with those first two that invested, I mean, you can only get better from there.
Yeah, it's a little bit of a crazy world, this.
Yeah.
how it works.
Great, Joe. Well, thank you so much. If there are no more questions, yeah, this has been absolutely amazing. It's certainly got my head wrapped around trying to think of Bitcoin as a, what is it, a unit of account.
Yeah. Yeah. Happy, people, if anyone's interested to reach out,
Thank
we are in a
you.
very extroverted mode right now.
Lovely. Well, you can get hold of me if you're looking for Joe. I've got his contact details. So yeah, thanks to everybody, and yes, have a fabulous Crypto Wednesday, should we call it today?
Yeah.
Right.
Thanks, Robin. It's a pleasure.
Awesome. Thanks a million. Cheers, everyone.
Cheers.